All right, here we are, guys. Last day of the week. So we roll through December, the 20th, but the date doesn't matter. What matters is what did we see? What did we call? How did we react? There was a little Brexit that got us a little bullish early, right before and after the open. This got it bearish, and it took a while to get back to bullish. Now, here's what's important. This is the ES. Early on, this downside was predictable. Whether you caught it or not, it either kept people from getting long in here and got people getting short. What would it be? Do you see how this market is making a higher high there versus there, there versus there, correct? So it's going up. Very easy to determine. But the NASDAQ, its cousin, let's call it, is diverging. It makes a high there, and it's making lower highs right there and there. So let me show you this a second. Let me explain this. If I put, let's open this up. If I put this yellow shade on this high, there, that is this shade up here. Those two yellow boxes are two highs made. Great. This next box is a higher high, but look where the NASDAQ is. It's down here. That high doesn't get breached by these guys. But this high got breached by this guy. Divergence. Showing you weakness in one only because you could compare it to something else. Market correlations. So I did a webinar that's on this YouTube channel about order flow patterns, and we get a couple of them today. One of them happened just after this in the NASDAQ. Let me blow it up. You had this market slightly get, where was it? Right over here. Let me blow it up so you could see it. And again, this is useless if you just see it after the fact. You got to be able to see it in the room when it's happening, and we do. So we had the market come in. Here it is right here. See this long consolidation? Looks like a hockey stick blade. Leaks out the bottom. As soon as it gets through the middle, what did I say? Hey, through 94, 95, look out above, and it rallies 8, 9, 10 points. Decent move in the NASDAQ. The middle mattered. It comes out through the low. It's a head fake. If you're not familiar with head fakes, watch a video that was posted December 19th. It's about an hour video. All right, so the market then put in all these swing highs there, around 03. And I said, if it gets through 03, you can't be short. You're going to have a lot of people chasing each other, hopping over each other, racing to the exits. So this jump from 03 to 10, 11 isn't a coincidence because you're understanding markets and consolidation boxes and the top of a range. The fact that it came back there, subsequent support, has to do with stuck traders, with where the stop started, another pattern that you see and understand in real time. Even this was a moment that you could understand and either take advantage as a momentum trader, get the hell out of the way, and that's when they kind of start moving through the top of this box right there, cut through the middle, and get fast right there. Right there. But then when they come back, and we were saying this, they get through 92, 93, be careful short because this thing could do this. It's a probability game. So you have to, in order to sharpen your predictive skills, you have to sharpen your probability skills. That needs to make sense. Strip out randomness and you replace randomness with probability. You have to replace some fear with some confidence. But like a saying that I've been repeating the last few days, if anger is the emotion that gets you confident, you're in trouble. In trading and in life, when anger is the emotion that gets you confident, you're in trouble. And anger is an emotion that will get you, quote, confident. in a bad way. Generally, it's because you're missing winners and you're like, I'm going to take the next trade no matter what. And it's not even a trade. So to leave you with the week, it's a grind. Every new high is an all-time high in this S&P March contract. And in many of the indexes, the uncertainty is becoming certainty with a lot of the fundamentals that have been driving the market in 2019. There's going to be some uncertainties at some point in 2020. We'll know what those are. But just keep your eye on the ball and remember two concepts you've got to continue to hone in on and sharpen. Correlations, which are market relationships, and order flow, which is tracking buyers and sellers to try to find where people are trapped. You make money when people lose money. People lose money when they get trapped. Have a great weekend. Be safe. Manage your risk before you take it. Don't be surprised if in 3 hours we're trading 35.40. It's got that kind of look and feel to it.